Hello. This is a recording for the Malawi tax system, F6, ACCA, Taxation Malawi variant. My name is Paul Jones Mpalawi Mbewe. I'm a certified chartered accountant, a member of the Association of Chartered Certified Accountants, ACCA, and I also have a Bachelor of Accountancy degree from the University of Malawi and a diploma in accounting. So I'm going to take you through the Taxation Malawi, and I believe that at the end of the lesson, you're going to enjoy and you're going to be finished on the introductory part of the Taxation Malawi. So the key learning objectives. Number one, at the end of the lesson, we're going to understand the overall function and the purpose of taxation in the modern economy. Number two, we're going to look at the principal sources of revenue and law practice. Number three, we're going to look at the systems for registration and the filing for annual tax returns. Number four, we're going to look at the time limits for the submission of information, claims, and payment of tax, including payments for provisional taxes. Then we're going to look at the procedures relating to inquiries, appeals, settlements of disputes. Finally, we're going to look at the penalties for non-compliance. People want to evade tax. We're going to look at the penalties for that and delays if you delay making payment of tax. What are the punishment? What is the punishment that the Malawi Revenue Authority imposes on late payment? So on introductory part, let's define taxation. Basically, taxation is an imposition made by the governing bodies on the income and the wealth of persons under their jurisdiction. So imposition, because you don't have to choose to pay or not, you just have to pay. It's imposed. Okay, so taxation is imposed on people by law, by the governing bodies, which includes state, the local authorities, and the central government. Okay, so these impositions are made on the incomes of the persons that are defined in Section 2 of the Taxation Act. So income of the persons is defined and outlined in Section 11 of the same Act, the Taxation Act. So a person, are we looking at the individual or a partnership or a company or a corporation? It can either be a trust, a club or society, or an organization, a public authority, and or an association. So Section 11 defines income and assessable income as the income of the person. That shall include the total amount of cash or otherwise, including any capital gain, received by or accrued to or in favor of a person in any year or a period of assessment from a source within or deemed to be within Malawi. And his assessable income shall be that income excluding an amount exempt from tax under this act. So as we already defined what a person is, we're looking at what has to be an assessable income. It's cash or otherwise. Otherwise shall mean a payment in kind. That includes a capital gain, appreciation in value of the property, land or buildings, capital gain. Received by or accrued to. It can be received by or accumulated accrued to, all right? When in the year of assessment, where if the income is received within the jurisdiction of Malawi, it's taxed within Malawi. Malawi tax system is source-based. So any revenue or assessable income received within the jurisdiction of the country, within the borders of the country, it's accessible in Malawi. So the overall function and the purpose of taxation in the modern economy. So we're looking at the main purpose of taxation. Basically, is to find the functions of the government machinery. So no government can work without tax, without money. So for that government to work perfectly, it needs to collect, it needs to find the funds, and much of the funds, maybe 40% or 60%, is collected within the country through taxes. So the other important purpose of taxation is, number one, it increases in effectiveness and productivity of the nation. How? If the government has got money to run the affairs of its operations, then that country productivity increase, the economy increase. Okay. So number two, it increases in quantum of revenue collection. For the budget to be financed, it depends on the revenue that the government has. So much of the revenue, 60% of the budget is financed by the taxes. So really the government would need the taxes. Number three, improvement in the service of the government. You know, the public institutions are financed by the taxes as well. So without the tax, public institutions will suffer. The public institutions, we're talking about the hospitals, the schools, the social welfare bodies, and all that. Okay. Number four, it improves employment at all industry verticals. So in a country where there is much of unemployment, it is because the industry is not booming. So much of the, if the industry is booming, it means that people will get employment in the process. At the same time, those institutions will be able to pay taxes to the government. So that money will be moving, circulating in the system. Okay. Number five, introduction of modern technology into the system, in the sense that collection of taxes are now, it's online. You can do it online, pay online, submit your taxes online, and so on and so forth. Rationalization of items and conditions in the economic system. All right. Number seven, rationalization of employment terms and conditions. So the canons of tax introduced by Adam Smith. What are the canons? These are basically the factors that attributes to introduction of taxes, the reasons why tax is important. Okay. So what did Adam Smith say? Equity or equality is number one. So a tax system should be fair in its application to all taxpayers. As a result, all taxpayers should be treated equally. Taxes should be based on the individual's ability to pay that tax. So by principle, for tax to be fair enough, it has to be, there has to be some sense of equality or equity. People it shouldn't be punitive in principle. Okay. Everyone should pay tax based on the ability to pay that tax. Okay. So a good tax system is agreed that a progressive element of income tax is fair, in the sense that those with more income pay more tax compared to those who are earning less income. So we're going to look at the type of taxes that are equitable and that satisfies the canon of equity. Okay, a good tax system should have a sense of certainty. What is certainty? The taxpayer must be sure of what is expected of them regarding what they are expected to pay, when and where and how the payment is supposed to be made. So when the government is designing or redesigning the taxation system, the taxpayer should know, how much am I supposed to pay as a taxpayer? When should I pay? That's why there is a rate of value-added tax. And you know definitely that value-added tax is going to be paid on the 25th following the month when the tax was deducted or when the tax was collected. Okay, so there has to be some sense of certainty. Convenient. The taxpayer should be able to pay taxes in a convenient manner. As a result, the payment of the tax should be related to the time at which the taxpayer has the money. There should be some flexibility in terms of the paying the tax. You have collected the tax, yes. You have charged the tax, yes. Have you collected the money for the tax? Yes. Then you have to pay the tax. Okay? You already know the time frame, and that is allowed for you to have a breathing space before you pay the tax. Economy, we look at the cost of collecting the tax. The cost of collecting the tax should not be more than the value of the tax itself. So the government should benefit on the collection of taxes. So there are some canons that are introduced by BASTABLE and others. Number one is elasticity. So taxation should be elastic. What does elastic mean? Elastic nature is a sense that more revenue is automatically fetched when income of the people rises. Okay, that agrees with the element of equity under Adam Smith. The more you earn, the more you pay in taxes. Okay, a good tax system should have a sense of productivity. So this implies that a tax must yield sufficient revenue and not adversely affect production in the economy. It shouldn't be punitive. You shouldn't collect more from the people in order to keep the economy moving, okay, in a positive way. The tax system should be simple. There should be some sense of simplicity. Simplicity implies that the tax system should be very simple, plain, and intelligible to the taxpayer. So if it is complicated, obviously, the taxpayer will find it difficult to understand and calculate. So most of the taxpayers, when they see that the tax system is difficult, they would definitely find a way to evade the tax or avoid to paying the tax. Okay. Number four, there should be some sense of diversity. A good tax system should incorporate a broad taxpayer base and the sources of income, e.g. from employment or from investments, employment or investments. So it should be diverse. You shouldn't just collect tax from one source. When you're devising this tax, you should make sure that this is done. All right. So comprehensibility, the tax system must be understood by the taxpayer. All right. So let's look at the social justice purpose of taxation. The type of taxation structure has a direct impact on the redistribution of the wealth of a country. The main ways of restructuring or structuring the system should be proportional taxation, where as income rises, the proportion of tax remains constant. For example, proportional tax is one that taxes 20% for earnings of some sort of level. Progressive taxation is when income rises, the amount of tax also rises by proportion. An example of this would be 10% of 100,000 K of income. If it's rising to 40% of 400,000 income. So the Malawi system of income tax is an example of what we call progressive taxation. Regressive taxation is when income rises, the proportion of taxation paid falls. An example of this would be a tax on fuel that must be paid by both low and high income earners. So there's no sort of justice. If you earn more, whether you earn more or less, you're still gonna pay the same level of tax. Okay. Number four is an ad valorem principle, where we're saying that this is a percentage of tax added to the value of the goods that you purchase. An example is the VAT tax rate in Malawi, which is 16.5 of most of the goods in Malawi. All right. So administration of taxes, who is responsible to administer the collection and the payment of taxes? All right. Section 3(1) of the Taxation Act 2008 states that they shall be constituted of a Commissioner General or Commissioner of Taxes, which shall be a public officer or a public office. The holder shall be charged with general administration of taxes. So under Section 4(1) of the same Taxation Act, all officers appointed for the purpose of carrying out the Act shall be under the direction and control of the Commissioner and shall perform such duties as the Commissioner may direct. So the Commissioner may delegate some of his powers or an administrative officer to an administrative officer of the functions conferred or imposed on him by the Act. So an officer shall mean a person who is or has been appointed or employed by the government and who by reason of appointment or employment or in a course of the employment may acquire or has acquired information respecting the affairs of any person disclosed or obtained under the Act or any previous law and shall include a special arbitrator and any assessor appointed under Section 98(3). So the administration of taxes in Malawi rests in the hands of the Commissioner, who is the overall authority of the Malawi Revenue Authority, MRA, an agency under the Malawi government which administers the Taxation Act. Okay. So the Malawi Revenue Authority, it's an agency of the government of Malawi, responsible for assessment, number 1, 2, collection, 3, accounting for tax revenues within the jurisdiction of the country. So it was established by the Parliamentary Act in 1998 and was launched 2 years later in February 2000. So it was formed to generally improve the functions previously carried out by the Division of Customs and Excise and income tax system in the Ministry of Finance. So before the Malawi Revenue Authority was established, it was the responsibility of the Ministry of Finance to collect and administer the taxes in the country. So it operates as a government tax administration agency under the Ministry of Finance. So the revenue that it collects goes to government for implementation of various socioeconomic development projects, such as construction of public institutions, be schools, the roads, bridges, and healthy facilities, and provision of social welfare services. Okay, so MLA is overseen by the Board of Directors and headed by the Commissioner General, who provides leadership, strategic direction, and controlling the operations of the authority. In pursuance of these duties and to accomplish the mandate of MRA, functional divisions have been established. So what are these functional divisions? There are 3 in nature: the Customs Division that looks at imports, okay, and the Customs Division that looks at exports, and the Domestic Tax Division, domestically, or tax that is generated domestically. It also has a support division, namely the Finance Department, Administration Department, Human Resource and Organization Department, Legal Services, Information and Communication Technology Department, Tax Investigation Department, Policy Planning and Research Department, Corporate Affairs Department, Internal Audit Department, Supply Chain Department, and Internal Affairs and Modernization Department. So MRI's mission statement is to maximize revenue collection through fair, efficient, and transparent administration of Malawi taxes and custom laws while providing high quality service to all the taxpayers. So the vision for MRA is to be a modern, professional, and efficient revenue authority that provides first-class service to all its stakeholders. So the core objectives of the body, MRA, is number one, professional and service excellency. Okay, they are mandate to provide a professional service and excellency. Okay, equity and fairness, no biasness in the provision of the service, integrity and trust, exercising high level of integrity and professionalism, efficiency and accountability, teamwork, courtesy, and respect. Okay. So what are the functions of MIA? Number one, assessment, collection, receipt, and accounting of specified revenue. Number two, to administer and enforce the specified provision of laws. Number three, promotion of voluntary compliance to the highest degree possible. Number four, improvement of the standard of service given to taxpayers with a view to improving efficiency and effectiveness and maximizing revenue for the government. Number five, counteracting fraud and other forms of fiscal evasion. Number six, advising the Ministry of Finance on matters of revenue policy and administration and collection of revenue subject to the stated laws and regulations. Number seven, performing any other duties related to revenue as the Minister of Finance may direct. Okay, there has to be a secrecy rule to the officer bearers at Malawi Revenue Authority. So every officer shall preserve and aid in preserving secrecy regarding all matters that may come to his attention in the performance of his duties in connection with the act, and shall communicate any such matters to any person whomsoever other than the taxpayer concerned. So the commissioner and the other officers, before acting under the act, shall take and subscribe before the magistrate or the commission of oaths the appropriate oath of fidelity and secrecy set out in section 9 in the 9th schedule of the Taxation Act. So there has to be some exemptions to the secrecy rule. The commissioner shall permit access to the payer information under the following conditions as per section 6, subsection 6 of the Act. Number one, where the information is needed by the Auditor General as per the request of the Auditor General's office. Number two, where the information is required by the authorized government officer. Number three, where the information is required by the taxpayer himself. Number four, where the commissioner wants to establish statistics figures on the taxes. Number five, where the information is required for the purpose of carrying out act into effect. So what are the powers of the Commissioner General? Section 24 says that one of the power is to decide whether timber has been grown as a timber for sale or not. Section 35, approval of deduction of bad debts. So the Commissioner General has got power to approve of the write-off of bad debts. You know, bad debts affect the, if approved, it becomes an allowable expense. So it affects the profit or loss of the company. Okay, section 636. One of the power is to determination of taxable income from which export allowance is deducted. Section 38A, subsection 1 and 2, determination of allowable deductions against assessable income arising from sale of timber. Section 41, subsection 1, to decide whether a change in the shareholding of the company has been effected to take advantage of assessable loss or not. Another power provided in section 45 is provisional acceptable basis of inventory valuation. Another power subscribed in section 55.1 is to accepting accounts prepared to date other than 30th June for assessment. Section 59, determination of taxable income of non-exempt producers incorporated. Section 48E, reduction or waiver of penalty for non-payment of provisional tax. Section 105.6, extension of time to pay tax, payment of the penalty. So all those are the powers subscribed to the Commissioner General. So communication with the taxpayer. Each company is required to appoint a public officer who is responsible for ensuring that all taxation matters are dealt with. All notices, assessments, and returns by the Malawi Revenue Authority are directed to the public officer at his specified office. So any notice or document is regarded as served upon a person sufficiently and effectively if it is one personally served upon him. Him shall mean the officer that is appointed by the company to undertake or provide with information to MRA regarding the taxes of the company. Okay. Number two, left with an adult person who is resident at his known address, place of abode, office, or place of business. Three, sent by the post addressed to such a last known place of abode, whether inside or outside Malawi, office, or place of business. Four, affixed at the last known place of abode, office, or place of business, and the person will be deemed to have received the notice of on the 14th day after affixing. Okay, so types of taxes. There are different types of taxes. Number one, income tax. This is a tax that is payable by individuals on their earned income, such as employment income, self-employment income, that's business, and pensions. It is collected from employment using pay-as-you-earn system, and from self-employment, individuals using self-assessment system for assessing taxable income. Number two, corporate tax. This is tax placed on profit of a firm with different rates used for different levels of profits. So corporate taxes are taxes against profits earned by the business during a given taxable period, and they are generally applied to companies operating earnings after expenses and depreciation have been deducted from revenue. Depreciation shall mean the tax allowable depreciation, tax depreciation. Okay. Another different type of tax is capital gains. What are capital gains? It is a type of tax levied on the capital gains by individuals and corporations. These are the profits that an investor realizes when he or she sells the capital asset for price higher than the purchase price. So the capital gains are only triggered when the assets is realized, not while it is held by the investor. So an investor can own shares that appreciates every year, that appreciates in every year, but the investor does not incur a capital gains tax on shares till the shares are sold. Same if the asset is appreciating in value, the capital gain shall occur when the asset is sold. Okay. So to continue, inheritance tax, it is tax on capital earned, not income. It is charged when an individual's worth or estate is given away. Okay. Number five, stamp tax. This is a type of tax placed on legal documents, usually in the transfer of assets or property. Where enforced, this tax is placed on the transfer of homes, buildings, shares, copyrights, land, patents, or securities. The transfer of documents in Malawi is only legally enforceable upon they are stamped, or once they are stamped, which shows the amount of tax paid. It is also referred to as stamp tax. So, classification of taxes. Okay. Let's start. Malawi taxes can be classified either direct or indirect tax. So what are direct taxes? Taxes paid directly to the government by the person on whom it is imposed. So the advantages of this type of tax is that it's equitable. The burden of direct tax cannot be shifted. Hence, equality of sacrifice can be attained through progression. It is economical. Their cost of collection is low. They are mostly collected at the source. Example, it should be income tax, which is deducted from the person earns per month, okay, through pay as you earn. It is certain in case that the direct tax, the taxpayer know how much is due from them. There's some sort of a percentage calculated. Okay, elastic. If the state suddenly stands in need of more funds in an emergency, the direct taxes can well serve the purpose. The yield from the income tax or death duties can be easily increased by raising their rate. People cannot stop dying in fear of paying death duties. So the more you earn, certainly the more taxes you pay. These type of taxes are productive in nature. Another virtue of direct taxes is that they are productive in nature. As a community grows in numbers and prosperity, the return from direct taxes expand automatically. So the direct taxes yield large revenue to the government. Okay. Disadvantages of direct taxes available. The one submitting the tax can submit a false return of income and thus evade tax arbitrarily. Number two, if taxes are progressive, the rate of progression must be fixed arbitrarily. And if proportional, they fall more heavily on the poor. So the poor pay more than the rich. Thus, both are bad. The rate of taxes depend upon within which the determination of the Ministry of Finance. So if the taxes are too heavy, they discourage saving and investment. In that case, the country will suffer economically if people are not saving. So another form of tax is the indirect taxes. So what are the indirect taxes? An indirect tax is the one in which the burden can be shifted to others. So the taxpayer is not the taxpayer, okay? So the impact and the incident of the direct taxes are on different persons. An indirect tax is levied on and collected from a person who manages to pass it on to some other person or persons on whom the real burden of tax falls. So an example of indirect tax is VAT. What are the advantages? Convenient. Indirect taxes are imposed on production, sale, and movements of goods and services. These are imposed on manufacturers, sellers, and traders, but their burden may be shifted to consumers of the goods and services, whom are the final taxpayers. Such taxes in the form of higher prices are paid only on the purchase of the commodity or the enjoyment of the service. So these are difficult to evade. Indirect taxes have inbuilt safeguards against tax evasion. Indirect taxes are paid by customers and the sellers must collect it and remit it to the government agency. Wide coverage, unlike direct taxes, the indirect taxes have a wide coverage. Majority of the products or services are subject to indirect taxes. So that being said, the consumers or users of such products and services have to pay them. So it is universal. Indirect taxes are paid by all classes of the people, and so they are broad-based in nature. Poor people may be out of the net of the income tax, but they pay indirect taxes while using or buying the goods. So the disadvantage of indirect taxes, number one, high cost of collection. So indirect taxes fails to satisfy the principle of the economy. The government has to set up elaborate machinery to administer indirect taxes. Therefore, the cost of the tax collection per unit of the revenue raised is generally higher in some countries. Of course, Malawi in particular, in the case of the most of the indirect taxes. Number two disadvantage is that it increases income inequalities. Generally speaking, the indirect taxes are aggressive in nature. The rich and the poor have to pay the same rate of indirect taxes on certain commodities of the mass consumption. This may further increase income disparities among the rich and the poor. So regardless of your earning capacity, you pay the same rate of VAT, 16.5% in Malawi. Number three, it affects consumption. Indirect taxes affect consumption of certain products. For instance, a high rate of duty on certain products such as consumer durables may restrict the use of such products. So consumers belonging to the middle class group may delay purchases or they may not buy at all. So lack of social consciousness. Indirect taxes do not create any social consciousness, as the taxpayers do not feel the burden of the taxes they pay. So that's basically the end of our lesson.